kind of a muted reaction. We had this whole government shutdown thing pretty priced in from, Monday or Friday to now. So not a big mover right now. But yeah, I've got a couple slides for you just to give you a little context on what happens to the U.S. dollar when the government shuts down. We've seen this story before. We've had, I think, around 20 government shutdowns in this fashion since 1977.
That's
Equities
20 vacations embedded in.
exactly paid for.
Yeah.
Yeah, I don't know what the cutoff is for paid versus unpaid federal work during this time. Must be a bad deal if you're. I mean, obviously, government jobs are affected, right? And some are
I used to work
paid
for a
leave.
government job actually. I feel like we had a furlough situation one time.
I think that's how it works. And if it's extended, then it's
Yeah.
spot.
Yeah. It's kind of a weird. It's a weird kind of almost pushing paper around type of thing.
Mm-hmm.
It's the best way I can describe it.
And probably not the weirdest employment news a lot of federal government workers have had since this administration started. But yeah, if we're looking at historic price action, historic market movement, when the government shuts down, stocks relatively unaffected. We've seen some outperformance, in fact, in the equity market. But if we want to cut over to the next slide, U.S. dollar pretty consistently bearing the burden during government shutdown periods. We've seen pretty consistent declines. I think if you're looking across asset classes, you can look most consistently to gold as an outperformer during these times. But U.S. dollar historically not getting a lot of love during these times. But the magnitude of this effect on an average basis, not so much, more so in recent years, to the tune of almost a % decline over this period, but typically in the percent, around a % handle during the shutdown. And after the shutdown, there's a bit of a mixed bag, but we've seen some outsized negative reactions there. And looking back towards the most recent period, most recent shutdown, I think, has some more, even though it's a small sample size, just looking at one observation, has a lot of relevance here, not only because it's the last one, but it's a similar administration, right? The last shutdown happened during Trump's first term. We've had some narrowly avoided ones since then, but this happened in 2018, heading into 2019. Only 35 days from this slide. It looks like it was a whole year long. But happened over the new year. And we saw, looking at this euro-dollar market here on the right, we saw this across dollar pairs that we had the most exhaustive weakness around 2 weeks into it. Didn't do enough qualitative research to know exactly what the circumstances were around this time that affected such a move. But overall, throughout these shutdowns, we haven't seen too much of a sustained pullback throughout the shutdown period. Now, going over to the next slide, what matters most here, I think, is the duration and the resolution, because what we saw last time, which was the most exhaustive dollar drawdown, was also that 35-day, very long shutdown. So I think we'll start to see, as you've seen in the 9 hours since it's been shut down, we haven't seen any jolted reaction, as dollar markets were pretty pricing this in, as were gold markets and everything else. And so not a surprise that we didn't avoid a shutdown last night, but I'm curious to know, how long of a duration are people pricing in for this? Because it was clear to see that people are expecting a shutdown, but I don't know how to tell from just looking at tape action how long this is expected to go on. So we'll definitely see, like we saw last time, around that 2 to 3 week period. Probably some if. All of these effects compound over time, and if there isn't really an end in sight immediately of, okay, we've got everyone in the room trying their hardest to resolve this, if they can't figure it out quickly, how long is it going to last, bad effect on the dollar.
Mm-hmm.
And also, the other thing that I think we saw last time is the actual resolution matters, because that's a data point that markets are digesting, just like anything else, that if we get out of this shutdown and it results in a huge spending package, is that good for dollar prospects? The national deficit rising in its own right, not really. So I think how the conclusion, the deal we make, matters a lot for getting out of this period as well. But we have seen, looking at the past observations, we haven't seen too much of a detrimental impact over the long term for getting out of these shutdowns. So just wanted to end with this last slide here of what to watch. Looking at all of the 20 US dollar pairs, we're looking most at the British pound and the Japanese yen. Historically, the pound has had the most consistent shutdown reaction, and right now is an interesting time for this to happen, because we've had some pound weakness from their own fiscal policy concerns. Now we're giving a little bit back there, and then
I could see that. You know why?
Why?
Because they're like, we told them during the war. We told them a long time ago they should have stayed under our rule. So every time we shut down, they're like, we told you guys. Yep. Every time.
Here's a percent back. I like it.
That's a throwback. Throwback.
Throwback.
I don't have government shutdown data back to 1776.
Yeah, that's right.
But,
yeah.
Well, that's unfortunate, because that's most important.
That's the most relevant.
Yeah.
It's called the King George effect or something like that.
And then dollar yen, we've seen already today, a 0.7% downturn in that pair. That's reversing slightly now, but we're seeing that from a competing safe haven flow, much like gold. Assets moving away from U.S. dollar and bonds, just because of the decreased demand for confidence in U.S. assets, and moving to that Japanese yen, which, where we're sitting historically from a price action perspective, a lot of room to fall. And then the other wrinkle here is no news from government agencies like the BLS, so the much anticipated non-farm payroll report this Friday, not looking like it's going to happen. Maybe even the CPI release on the 15th. And so we talked about it for stocks. I think we might be in the no news is good news camp right now. But for U.S. dollar, not too sure what the impact is. It might be a drift lower, but regardless, you're not getting as much event risk from the dollar side of things if you are actively trading these pairs. So it goes back to more of that ad hoc event risk of developments in this story, but definitely key to point out that we're not getting any of those releases. So